Have you ever stopped to think what really goes into a company's quarterly earnings report? I mean, it's way more than just uh, a sheet of numbers. Right.
Oh, absolutely. It's more like a story unfolding strategy, market vibes, some pretty bold moves sometimes.
Exactly. And today, we're going deep into the latest results for Tilaknagar Industries Ltd. We're looking at their first quarter for the fiscal year 2026, so the period ending June 30th, 2025.
Yeah, and for this, we've got the good stuff straight from the source. We're talking their official board meeting docs, the detailed financials, both consolidated and standalone, plus their results update and the big earnings presentation.
So, a lot to unpack there.
Definitely paints a full picture of how they're doing and, importantly, where they're aiming to go. Some big ambitions in there.
Okay, so our mission here today for you is pretty straightforward.
hmm
We want to pull out the key bits from all this, figure out what it actually means, and, connect the dots.
So you don't just get the what, but the why. Why this matters for Tilaknagar and maybe even for the wider Indian spirits market.
Right. Expect some surprises, maybe a few aha moments as we look at their journey and what's next. Ready to jump in?
Let's do it. So the big headline right off the bat for Q1 FY26, Tilaknagar Industries hit its highest ever quarterly EBITDA.
Okay, highest ever. That sounds impressive. But beyond just the record, what does that actually signal? Is this like a flash in the pan, or does it tell us something deeper about how they're running things now?
That's a great question. It's a strong signal, really. EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It's a core measure of, well, operational cash flow.
Right.
So hitting a record high suggests they're getting more efficient, sales are strong, and maybe that turnaround strategy we've heard about is actually, paying off.
Okay, interesting. So what's feeding into that number? Let's look at volume first.
Volume growth was pretty punchy, up 26.5% compared to the same quarter last year. They hit 32.1 lakh cases.
And just for context, a lakh is 100,000, so we're talking over 3.2 million cases.
Wow.
That's a lot of bottles.
It is. And what's really telling is this is their best Q1 volume since way back in FY15. So demand seems genuinely strong, maybe even bouncing back significantly.
Okay, and that volume translates to revenue, obviously.
It does. Net revenue from operations climbed to Rs 409.1 crore. That's about 4.9 billion rupees, maybe 58 million US dollars. A solid 30.6% jump year on year.
But there's a little wrinkle in that revenue number, isn't there? Something about a subsidy.
Yeah, you caught that. Good point. There was a subsidy income included about Rs 38.6 crore. So if you pull that out to see the core operational growth, the net revenue still grew by a healthy 20.5%. Still strong.
Okay, 20.5% adjusted. Still nothing to sneeze at. What about profitability then, beyond that headline EBITDA?
Right, so that EBITDA figure, even if we adjust for the subsidy, came in at Rs 55.8 crore. That's still up 25.0% year over year.
And the margin.
The reported EBITDA margin was 23.1%. Adjusted for the subsidy, it's 15.1%. Now that adjusted figure is actually up 55 basis points compared to last year.
Basis points.
Yeah.
Right, hundredths of a percent. So about 0.5% improvement. It might sound small, but in margin terms, that can be quite significant, yeah. Shows real efficiency gains.
Exactly.
Yeah.
It signals they're managing things tighter, maybe getting better leverage as volumes go up, controlling costs.
So what's driving those gains specifically? Is it sustainable?
Well, it seems to be a mix. Better operational leverage from higher sales is definitely part of it. Plus, effective cost management seems to be kicking in, and this flows down the line. Profit after tax, PIT, if you exclude exceptional items, that shot up 120.8% to Rs 88.5 crore.
Wow.
Even adjusted for that subsidy, PIT still grew 44.5% year over year. And for the shareholders, the reported diluted EPS earnings per share was Rs 4.54 per share. Pretty healthy returns.
Okay, so the top line and bottom line numbers look good, especially with those adjustments in mind. But let's dig a bit deeper. Net sales realization, NSR per case, it went up slightly from the previous quarter, Q4 FY25, right? From Rs 1,182 to Rs 11,193.
It did, yes.
But crucially, it fell year over year. And the reason cited was a price reduction in Andhra Pradesh. Now, what does that tell us? Are they playing a market share game there? Trading margin for volume?
That's a sharp observation. It very likely points to exactly that, a strategic push for market share in Andhra Pradesh, which is a really fast-growing market for them.
So a tactical move, maybe?
Probably. Sacrifice a bit of margin now to grab more consumers, build that volume base for the long run. It's a common play in competitive markets. And, connecting this to the bigger picture, their balance sheet gives them the room to make moves like this.
Oh, so?
As of June 2025, they were sitting on a net cash position of Rs 163.4 crore. Gross debt was only Rs 39.1 crore. That's a very strong liquidity position. Gives them flexibility.
Okay, strong cash position.
Right.
But there was one potential flag.
Mm-hmm.
The auditors, Ms. Harshal Shah and Company, they issued a qualified opinion. That usually means they found something not quite right, doesn't it?
It does. It's basically the auditor saying, we've checked the books, and mostly they're fine, but in this case, the but was about an impairment assessment.
Impairment, like testing if an asset is worth what it says on the books.
Exactly. Specifically for one of their E&A plants, that's extra neutral alcohol, key stuff for making liquor. Accounting standards require this assessment if there are signs the asset might be impaired, meaning it might not generate the expected future cash flows.
And Tilaknagar didn't do it.
Apparently not, despite indications it might be needed. And importantly, the auditors mentioned this isn't the first time. It was noted in previous reports, too.
Okay, so that's definitely a point to watch. Doesn't invalidate the whole report, but it's a qualification.
Right. It's something stakeholders would keep an eye on. But let's shift gears now from the numbers to the strategy, because this is where things get really transformative, and it connects right back to that strong balance sheet we just mentioned.
Okay, I'm intrigued. What's the big play?
In July 2025, Tilaknagar Industries, let's call them TI, signed the papers to buy the Imperial Blue business division.
From Pernod Ricard, India. Wow. Imperial Blue. That's a massive brand, isn't it?
Massive. It's the third largest IMFL brand Indian-made foreign liquor. This is a huge, huge move for TI.
Okay, third largest. That's got to cost a pretty penny. What was the price tag?
Substantial. Roughly EUR 413 million. That translates to around Rs 4,150 crores, or maybe close to $500 million US.
Whoa.
That includes some working capital, about EUR 70 million, and there's a deferred bit, EUR 28 million they'll pay later, around FY30.
So this isn't just buying a brand, it's buying serious scale. How big is Imperial Blue in terms of actual sales?
Get this, 22.4 million 9-liter cases sold in the year ending March 2025. And revenue. Over Rs 3,000 crore in that same period, the last 12 months. Plus, the deal includes 16 manufacturing units, 2 of which TI will now own outright.
Okay, the scale is undeniable. But why is this strategically such a big deal? I mean, it's being called the largest deal like this by an Indian company in the alcobev space. What's the fundamental shift here for TI?
It's a complete game changer. Think about it. TI has primarily been known for brandy, right? Mansion House, Courier Napoleon, strong brands, but mostly brandy.
Right.
This acquisition catapults them straight into the heart of the whiskey category. And whiskey is by far the biggest spirits category in India. So they're not just adding a brand, they're buying a massive presence in the largest segment.
So a major portfolio diversification.
Exactly. It transforms them from being, predominantly a brandy player, mostly strong in the South, into a true pan-India multi-category company. Post-acquisition, whiskey is expected to be something like 67% of their volume. Brandy drops to about 31%. That's a radical rebalancing.
And geographically, too, you said less reliance on the South.
Definitely. Their revenue mix is currently heavily skewed south, like 86%. This deal significantly boosts their presence in the north, east, west, makes them much more geographically diversified.
Okay, that makes sense. Financially, what's the expectation?
They expect it to be cash EPS accretive, so good for earnings per share on a cash basis, and they're counting on synergies, both on the growth side and the cost side.
Synergies. Always the magic word in acquisitions. How soon could this all happen?
The deal needs the nod from the Competition Commission of India, the CCI. They expect that approval and the deal to close probably by the end of this calendar year, 2025. So relatively soon.
And how are they paying for this $500 million deal? That strong balance sheet helps, but
it'll be a mix of debt and equity. They've set a target, though. Get the net debt to EBITDA ratio down below 1.0x by FY29. That's aggressive, but shows confidence in the cash flow this combined entity will generate.
Makes sense. Need to keep the debt manageable after such a big bite. Any operational details on the handover?
Yeah, they've thought about that. They'll have a transition manufacturing and services agreement, a TSMA, with Pernod Ricard for a smooth handover. And crucially, they've locked in a long-term supply deal with Shiva's Brothers for a CAB concentrated alcoholic beverage, which is a key ingredient for Imperial Blue, ensures continuity.
Okay, so the Imperial Blue acquisition is clearly the headline strategic move.
Yeah.
But they're not just relying on that, right? What else is happening?
No, they're also investing in their existing strengths. take Andhra Pradesh. They're expanding Prague distillery there.
Prague Distillery. That's their
That's
subsidiary.
wholly owned, yeah. The board approved about 25 crores in new capital expenditure for a big bottling capacity boost.
How big a boost?
Pretty significant. Existing capacity is around 6 lakh cases a year. They're adding another 30 lakh cases capacity, so total will be 36 lakh cases annually. That's a 6-fold increase in potential output there.
Wow. And the total investment for that?
The total approved is Rs 59 crore. That includes the new 25 crore plus about 33 crore they'd already paid for license fees and interest to the state authorities.
And the logic is just meet the demand in Andhra Pradesh.
Pretty much. AP is one of the fastest growing IMFL markets in India, so they need the capacity to keep up and, capitalize on that growth. They expect this expansion done within 12 months, funded by the parent company, TI.
Right, securing their base while making the big whiskey play.
Hmm.
Makes sense. What about protecting their existing brands? Any news there?
Actually, yes. A significant legal win. In July 2025, the Bombay High Court confirmed TI's ownership of the Mansion House and Savoy Club trademarks.
Okay. There was some dispute there.
There was. This ruling threw out some earlier appeals and, importantly, set aside a previous order that might have allowed someone else to use the Mansion House name in West Bengal.
So this secures their exclusive rights.
Exactly. Uninterrupted, exclusive use and sale under those key brands. That's vital for brand equity and preventing confusion in the market.
Good for them. Any other portfolio moves? Maybe smaller bets?
Yeah, they've also been diversifying a bit into, let's say, more craft or newer categories. They upped their stake in Spaceman Spirits Lab.
Spaceman. They make Samsara Gin, Satara Rum, Amara Vodka.
That's them. TI went from just under 13% stake to over 21% with another investment of about Rs 10.66 crore. And there's an option to increase that stake further if Spaceman hits certain milestones.
Interesting. So dipping their toes into the premium gin rum vodka space. What's the strategy there? Just diversification.
Seems like it. Tapping into those growing premium and craft segments, hedging their bets a little beyond brandy and now whiskey. And, all these moves, the big acquisition, the organic expansion, the legal win, the smaller investment, they all fit into this bigger narrative of TI's turnaround.
Right. You mentioned the turnaround earlier.
Yeah, just context. They went through some tough times, major debt restructuring, refinancing. But they managed to become net debt-free back in September 2024, actually ahead of schedule. Got a credit rating upgrade from Crystal too.
So they really cleaned up their house first.
Precisely. Laid a solid foundation, strengthened the balance sheet, and then launched these big, ambitious strategic plays like Imperial Blue. It shows a clear progression.
Okay, that context is really helpful. So let's circle back to their core brands then. We talked about the strategy, but how are the flagships actually performing right now? Mansion House Brandy.
Still a powerhouse, it remains the #1 selling brandy in India, and globally, it's the second largest. Within India, across all spirits, it's the 7th largest brand. Globally, 29th. That's serious scale and staying power.
Really is remarkable. What about Courier Napoleon?
Also doing very well. It was highlighted as the 3rd fastest growing brandy globally in 2024. It's the 3rd biggest brandy in India, 5th globally, and get this 13th fastest growing spirits brand overall globally.
Wow, so both core brandy brands are performing strongly on a global scale too. How are they keeping that momentum? Marketing must play a big role.
Absolutely. They've had some pretty visible campaigns. Remember the one with NBK Nandamuri Balakrishna for Mansion House?
Vaguely. What was the theme?
It was called Dil Open Chai, Life Welcome Chai. Sort of about fostering openness, celebration, welcoming life, trying to create that emotional connection.
Do those kinds of campaigns work well in the spirits market, especially in India?
They can be very effective, yeah. Connecting to cultural values, emotions, builds brand loyalty beyond just the product itself. They also had another campaign, A Warm Welcome Always Breaks the Ice.
Okay, I think I saw that one. Use humor, relatable social situations.
Exactly. Focused on diffusing social anxiety, making connections with the product subtly integrated. And these aren't just, random efforts. Their campaigns are actually winning awards.
Oh, really? Like what?
The Mansion House Boys campaign, for instance. It picked up a gold award at DigiX by AdGully, best campaign in the food and beverage sector. So the industry is recognizing their marketing effectiveness.
That's a good sign. It suggests the message is landing. What about the actual liquid in the bottle? Any recognition for craftsmanship?
Definitely. Their Monarch Legacy Edition brandy has been racking up accolades. bronze at the London Spirits competition, named Specialty World's Best Brandy at the World Drinks Awards, even won awards for its packaging design.
So quality recognition across the board.
Seems so. They also won awards for Mansion House flavored brandies and even their Mansion House Gold Barrel whiskey at the Spirits Achievers and Selection Awards this year. So it shows a commitment to quality across different price points and segments within their existing portfolio.
Okay, so strong brands, effective marketing, recognized quality. Let's zoom out one last time. What's the overall company footprint look like now, or rather, as of the end of FY25 before this big acquisition really kicks in?
Well, they've got a long history, right? 90 years since 1933. Manufacturing-wise, it's quite extensive. 21 units spread across 10 states. 4 of those they own directly. The other 17 are contract manufacturing setups.
Gives them reach and flexibility, I suppose. And sales territories.
Pretty broad, covering 27 states and union territories in India, plus institutional sales like to the military canteens, and they do have an international presence as well.
And total volume in FY25 before this Q1 jump.
For the full year FY25, they sold 11.9 million cases. So yeah, already a major player even before adding Imperial Blue to the mix.
Okay, so wrapping this all up then, it feels like Tilaknagar Industries is genuinely at an inflection point.
I think that's fair to say. A really significant transformation underway. Moving from being known primarily as this regional, brandy-focused company
To positioning themselves as a pan-India player across multiple spirit categories, especially with that huge leap into whiskey.
Exactly. The strategy seems clear.
And we've seen the numbers back that up in Q1 FY26. Strong volume, improved profitability, even with some adjustments. That operational strength is key.
It provides the foundation. But like you said, the really eye-catching stuff is the strategic maneuvering. That Imperial Blue deal is just monumental for them. It reshapes their portfolio, their geographic spread, their entire market standing, potentially.
It really does. It feels like they're making a bold statement about their future ambitions.
Absolutely. Leveraging that turnaround, that financial stability they worked hard to achieve, to make this big bet on becoming a multi-category pan-India force, particularly in whiskey.
So here's a thought to leave you with. This massive shift, especially diving headfirst into the hyper-competitive whiskey market. What does this really mean for Tilaknagar's long-term future? Can they successfully integrate Imperial Blue and challenge the established players?
And maybe how does a move this big ripple outwards? Does it change how consumers choose their drinks? Could it even trigger more consolidation, more big deals within the Indian spirits industry?
Definitely something to watch, a fascinating transformation story unfolding.